Welcome to this ICT concepts training video into the CISD, which is your ultimate entry trading signature. There's a moment in every single trade where the market tells you it's about a flip. Most traders miss it. It's called a change in state of delivery. And once you understand this, you'll never second guess your entries again. If you're like most traders trying to apply SMC and ICT principles, you mark out your levels, you see liquidity being swept, you even catch signs of a possible reversal, but you still hesitate. Or even worse, you enter too early, get stopped out, and then watch price take off without you. It's not that you don't understand SMC principles, it's that you don't yet have a consistent, repeatable formula to confirm that the change is in fact real. That's what the CISD gave me. Before I understood it, I would catch setups, but I was always second guessing. That emotional toll, the doubt, the overtrading, the missed moves, it almost made me give up trading altogether. But the game changed for me when I learned to wait for the change in state of delivery. It is that precise moment where the market shows you the real shift in control is happening. It's not just about breaker blocks or break-in structures. It's about seeing that moment where the market structure and the intention all flip. Let us now dive into the mechanics about how the CISD works. So if you look on the chart over here, there's a few components that all have to align to be able to trade this method effectively. What you want to see on the higher time frame candles, you want to see a failure to displace, which is just a signature for reversal. In this failure to displace, we will observe manipulation sweeping these highs, but failing to displace above them. We look for this evident manipulation, where we've got this buy to sell candle forming this V formation, and then we'll see that the CISD line will become valid. When we've got all these components lining up together, this is where your CISD becomes successful. Here's another example. So you can see we've got a failure to displace on the higher time frame candles, and then if we jump onto the lower time frame, you'll see price sweeps out those lows. Now it's the candle or series of candles that sweep this low. We mark out the high of that level, and that becomes our CISD level. When price breaks above this level, that is precisely where you want to enter your trade. Let's zoom in a little bit here. If you look here, this would be our key level, which would be a previous candle high or a swing high or a swing low point. You can see price sweeps out this level, but also notice the aggression in the candles that sweep it out. We've got this aggressive buying that sweeps out the high, raids out these stop losses, and then we get this aggressive selling down, causes this V formation. Then what you want to do is you want to mark out the opening price of the candles or series of candles that caused that manipulation run. As soon as price breaks below those levels, this is precisely where you want to look for an entry. You want to make sure price closes below the CISD level to validate it. So here's an example. You can see price is forming these lows, and then price sweeps these lows. You can clearly see it's this aggressive run to the downside to sweep out these lows with these big wicks forming, taking out all the stop losses. Then price gets back into the range, causing this failure to displace. So what we want to do is we want to mark out the opening price of those candles or series of candles that caused this sweep to the downside, taking out the previous lows. Once price breaks and closes above the CISD level, this is where we look to take an entry. Oftentimes the CISD acts as a very strong support and resistance level. So you can see price breaks above it, comes back to retest it perfectly, and then takes off to the upside. Here is another example. You can see we've got a liquidity level over here, or a key level, and price comes to that level, then it sweeps out the previous lows. Once it sweeps out those lows at this significant level, that is where this formula and strategy becomes highly effective. So we look for the candle or series of candles that caused this sweep to the downside. You can clearly see by the wick size, this was a strong manipulation happening. And then we mark out the CISD level, wait for price to break above it, and then we can look for an entry. Oftentimes price will retrace back to that level, and then we can catch an entry to the upside. Once price breaks the CISD, it actually validates this manipulation, and we always want to trade away from manipulation. This is what a bullish CISD will look like. Price comes down, taps into a key level, forms a low, then price sweeps out that low, comes back into the range. We mark out that CISD. As price breaks it, we look for our long entry. Then for our bearish CISDs, price approaches a key level, then it forms our swing high points, and it sweeps out that high where we get the manipulation. We mark out the series of candles or candles that cause that sweep of that high, and when price breaks that level, we look for an entry. The key to CISD confirmations are: number 1, price comes to a key level; number 2, sweep of the higher time frame candle high or low; number 3, identify clear manipulation; number 4, mark out your CISD; and number 5, enter on CISD break and candle close. Here are some more examples so you can get a better understanding. We're on the 4-hour. You always want to look at a higher time frame failure to displace. You can see this 4-hour candle taps into a key level. It forms a high point. Then the next candle sweeps out that high but closes back into the range. This is what we call a failure to displace. Once we get this failure to displace presenting itself on the higher time frame, we jump onto a lower time frame. In this example, it's a 15-minute, and then we can observe the same process on the 15-minute, and then we can mark out the CISD level, because this is the level that caused the run that swept out these highs. So all we do is we mark out that level and we wait for price to break that level. You do not enter your trades until price breaks and closes through the CISD level. Here's another example. High time frame candle tapping into a key level, and then you see we get this failure to displace of these previous high points. Price is not able to close above that level, and we jump onto the lower time frame and we can observe, you can see this is the candle that caused the manipulation run to the upside, forms the CISD level, and we wait for price to break that level exactly like this, and this is precisely where you would look to take an entry. Let me show you how to locate it and draw it out on the charts. So here I am on the 4-hour time frame, and you can see price is coming into the key level, and you can see we get a failure to displace. This is where we see this current candle fail to displace the candle before it. This is what lets us know now we want to jump into our entry time frame. Here I am on the 15-minute chart, which is our entry time frame, since we used the 4-hour chart to identify the failure to displace. Now that we've identified the failure to displace on the higher time frame, we want to observe and find the CISD level. So if you look at this candle over here, this is the candle that caused this manipulation run to take out these highs. So all we want to do is we want to mark out the opening price of that candle, and then I mark out the name CISD. So this becomes our key entry level. We do not enter a trade until we see price break below this level. If price breaks below this level, this is a confirmation to take an entry. So then all we do is we wait for price to break this low. There we go, get a nice break of the low, and we can wait for price to either retrace back to the CISD or we can enter on the break. So if we enter on the break, this would be the entry. Stop loss would come above these swing highs, and then we could target either the lows or a potential fair value gap over here. You can see price came, look at that, price came back up to retest the CISD level. It also came to take out this fair value gap that was resting over here. And I just want you to pay close attention. Just look how this level was respected. Price came, retested the CISD, but we did not get a candle closure. In fact, this would be another place to look for a perfect entry. If you entered one position here, you could have actually entered another position on the CISD level, stop loss above these swing highs, and then we can target the lower fair value gap. So we would have potentially had two fantastic entries into this trade. If you look over here, we've got this nice big wick rejection, which is also a reversal candle that we can use in combination to confirm this entry. The whole basis of how CISD level works is that imagine we've got a key level. We wait for price to get to that key level. You can see price gets to the key level. As it taps into that key level, it forms a high point. We wait for that high to be taken out, and then we notice price will drop. So you can see over here, price comes, takes out this key level, then it creates a high point, it sweeps out that high, which becomes this manipulation. We always want to pay attention to manipulation because manipulation is letting us know the true reversal is going to take place. So then we want to mark out the candle or series of candles that cause that manipulation run, which is the CISD over here. Wait for price to break below that level. We can enter on the break or wait for the retest, and then price usually drops and goes into displacement after that. For our bullish example, you always want to have key levels marked out on your chart, and we do not enter until price comes to these key levels. So you can see we see price coming down to the key level. It taps into that key level, forms a low point, then we wait for that low to get swept out, the confirmation of the failure to displace, and then we wait for the CISD to break, where we look for an entry. So you can see over here, this is where the lows get swept out. This forms a failure to displace on a higher time frame candle, and then we want to look for the candle or series of candles that caused that sweep to happen, and we have it marked out over here. All we want to do is see price break the CISD level, and then we can look for our long entry. Let us have a look at another example. You can see I've marked out a key level. Price is coming into that key level. So that's the first step. So now I want to look for a failure to displace to happen. So there you go. We get a failure to displace happening on our higher time frame. Once we see this signature happening on the higher time frame, then we want to go to the lower time frame and look for an entry. Here I am on my 15-minute entry time frame, and you can see exactly what's going on. Price has come to the key level and it's swept out the high and it retraced back down. This is what we call a valid manipulation, because you can see this aggressive buying and then this aggressive selling kind of forms this V formation. Once you see the manipulation happening aggressive up and aggressive down, it confirms this. So what do we want to do is we want to mark out the CISD level over here. Remember, the CISD is the candle or series of candles that cause this aggressive run to sweep out the higher time frame highs and create that failure to displace. So we mark out this level and we want to see price break below this level. If it breaks and closes below this level, that is where we're going to look to take our entry. So you can see we wait for a clear break. There we go, your nice break happening. So what we want to do, we want to enter on the level, stop loss is above the manipulation, and we can place our targets, which I like to use fair value gaps as targets. So this would be the current setup that I would have taken. You can see price retraced perfectly up to the CISD level to retest it. And there you go, finally price tapped into our take profit. But I just wanted to show you how the CISD level works. So you can see price breaks, retests, and then continues all the way down. This one concept completely changed the game of how I trade. It helped me focus on less trades that were more high quality, and it helped me stay on the winning side. By having that CISD line in place, you simply do not enter if price does not break that level. I teach this whole strategy in depth in my SMC course with tons of live trade examples that I've personally taken, checklist PDFs, and I have a custom indicator that marks out all these CISD levels for you on your chart in real time. If you're tired of trading noise and want clarity and confidence at the point of entry, if this video clicked for you, hit that like and subscribe button. Drop me a comment. Have you ever used the CISD before, or is this your first time hearing about it? If you want the full CISD strategy breakdown, hit the link in the description below, grab my SMC mastery course, or test out my SMC indicator that marks out the CISD levels for you. Hope you enjoyed this video. I'll see you in the next one. Happy trading.